Namaskar and good morning. Today we will take a look at RBL Bank. It is slowly improving, and it is one of the small banks. It is headed by R. Subramanya Kumar, who is the managing director and CEO. He is a veteran in the banking industry with 40 years of experience. Now, prior to him, the actual promoter was Vishwavir Ahuja, former managing director and CEO of RBL Bank. Now, promoters don't seem to hold much equity at all. FIIs are holding 31.59% equity, DIIs are holding 22.34% of equity, government very small 0.36%, public hold 45.70. Now the shareholding pattern is okay, but promoters holding is very low. That's the worrying point. Very low or almost nil, we can say. Now the volumes of trading are reasonably good, 35 million, 8 lakhs, 8,000, something like that. Now the capital adequacy ratio is 17.9%, which is reasonably good. Net interest margin is 4.19%, which is good. Gross NPA is 1.84%, which is also good. Net NPA is 0.7%, good. CASA ratio is 31.1%, that's also good. Ratios are okay. Branch network, if you see, 403 branches are there, 412 ATMs are there, 1344 business correspondents are there. Business correspondent branches, that is microfinance branches. So branch expansion is a continuing affair. The bank's customer base is something like 90 lakh customers, which is also good. It is increasing. Loan book, if you look at that, presently 58% of the loan book consists of retail loans. 58% retail loans and 42% wholesale loans. That seems to be good. Retail loans are more easily recoverable. Corporate and institutional banking 32%, commercial banking 10%, business loans 19%, credit cards 21%, micro banking 12%, retail agri 2%, others 4%. So bank has got a diversified loan book, so which is not a problem. Its exposure includes NBFCs 5.6%, construction 4.1%, engineering 3.4%, power 2.7%, real estate 2.4%. Exposure to NBFCs only is a slightly worrying point. NBFC, anyway, banks have to have exposure to NBFCs, but it has been increasing. The bank has reduced its borrowings considerably. The fees breakup, if you look at that, credit cards account for 60% of total fees. So RBL Bank's credit cards have been actively canvassed, followed by general banking 12%, forex 10%, trade and others 9%, processing fees 8%, distribution fees 2%. So credit cards only maximum, but credit cards is okay. The bank has acquired 100% stake in Swadhar Fineserve Private Limited in 2018. The company started as a business correspondent, for the bank after it acquired a 30% stake in the firm 2016. Now fully with RBL Bank. So with these details, let us look at the latest Q2 report. The biggest revenue earner for any bank is interest on advances or bills, which is 1,764 crores for RBL Bank in Q2. In Q1 it was 1,714 crores. In last year Q2, 1,574 crores. So this interest on advances or bills has increased by 12% year on year and 2.89% quarter on quarter. The next one is income on investments. 418 crores in Q2, 359 crores in Q1 and 336 crores in year ago Q2 quarter. This has increased by 24.3% year on year and 16.39% quarter on quarter. Interest on balances with the RBI. RBI pays a small amount of interest to all banks for whatever balance are kept with them. These amounts are generally small. 58 crores in Q2, 113 crores in Q1 and 90 crores in Q2 of last year. This has come down by 36% year on year and 49% quarter on quarter. As I said, interest on balance with RBI is a small amount. Others also is a small amount. Other income also 585 crores. It has come down slightly from previous quarter, that is Q1 614 crores previous quarter, now 585 crores. And a year ago quarter 595 crores. So slightly come down year on year minus 1.69% and quarter on quarter minus 4.74% it has come down. Now let us look at expenditure. In the expenditure, the highest expenditure for any bank is interest expended. Interest earned is the highest revenue earner. Interest expended is the highest expenditure. 1,111 crores is the Q2 interest expended. 1,062 crores is in Q1 and 1,059 crores in last year Q2. It has gone up slightly by 4.94% year on year and 4.68% quarter on quarter. Employee cost is 420 crores in Q2, 390 crores in Q1 and 310 crores in Q2 of last year. So employee cost has gone up by 35.6% year on year and 7.67% quarter on quarter. Other expenses 819 crores in Q2, 828 crores in Q1. So other expenses has come down slightly quarter on quarter. And it was just 591 crores in Q2 of last year. So compared to Q2 of last year, Q1 of current year has gone up by 39%. But it has come down by 1% quarter on quarter. So taking expenses and revenues into consideration, operating profit comes to 498.31 crores. But previous quarter operating profit was slightly higher at 537 crores. And year ago quarter, Q2 of last year, 670 crores. So from there it has come down. Operating profit has come down slightly. Somewhat slightly, a little drastically also. 25.6% down year on year, 7.14% down quarter on quarter. Provisions and contingencies account for 241 crores in Q2, 253 crores in Q1 and 651 crores in Q2 of last year. Provisions and contingencies has come down, which is good. By 63% year on year it has come down. 5% quarter on quarter it has come down. So profit before tax 257 crores. Compared to previous quarter, it is slightly less. Previous quarter was 284 crores, now 257 crores. Now, last year it was drastically low, just 18.41 crores. So compared to that, year-on-year increase is 1295% increase year-on-year. But quarter-on-quarter, profit before tax has come down by 9.45%. Now, net profit is similar. Net profit is 187.51 crores in Q2, 208.66 crores in Q1, and just 9.72 crores in Q2 of last year. That is 1829% increase in year-on-year and 10% down quarter-on-quarter. Equity is 599.52 crores. EPS is 3.13, but previous quarter 3.48, but last year Q2 was 0.16. So year on year there is a considerable increase because last year was very dull. Now let us look at the NPS. NPS is a very important thing for any bank. Gross NPA is 2,457 crores, which has come down year on year by 21.5% and by 3% quarter on quarter. So gross NPA has come down. That's good. Net NPA is 790 crores. That has come down year on year by 34%. But it has gone up by 13.35% quarter on quarter. Quarter on quarter slightly up, year on year considerably down. Market cap is 8,915 crores. It's still a small bank. Current price is around 150. 52-week high is 205, 52-week low is 74, price earning is somewhere around 13, book value is 209, which is reasonably good. Dividend yield, no dividend actually. ROCE 3.95%, which is very low. ROE is 1.32%. Face value is 10 rupees. It has got its strengths. Let us look at that. It's a bank with a high trailing 12 months EPS growth. EPS is growing steadily. Increasing revenue every quarter for the last 4 quarters. Revenue has been increasing in the last 4 quarters. Company is able to generate net cash, and it is improving the net cash flow for the last 2 years. FIIs and FPIs are increasing their shareholding. Stock gained more than 20% in the last 1 month. So price momentum is reasonably good. But ROCE, return on capital employed, is declining. Return on equity employed also is declining. Return on assets also is declining. Declining in profit margins. Profits are increasing to some extent, but profit margins are falling. Company with somewhat weak financials. Yet, brokers have upgraded their recommendation or target price in the past 3 months. The last traded price is greater than R3, which is a positive breakout over the third resistance. Highest recovery from 52-week lows. Decrease in provisions in recent results, which is very good. RSI is indicating price strength. It is improving. as we said, return on equity, return on assets, everything is a little low as on today. Contingent liabilities are high at 68,530 crores. Other income is there, which is high, 2,296 crores. Now, 52-week high is 205, it is somewhere near to that. 52-week low is 74, it is way above the 52-week low. EPS is a little low only still, but it is improving. Face value 10 rupees, market cap 8,995 crores. That's all okay. Price is 26.95% away from 52-week high and 102% away from 52-week low. It has risen reasonably. Momentum is bullish. Compared to Nifty, RBL Bank is an outperformer. Market cap is very low. Price earning ratio is low. PEG ratio is low. Profit growth is good. It is reasonably growing. Shareholding pattern, if you see, we have seen that mutual funds are having good exposure, and we have got good exposure from FIIs, etc. Government participation is very low. Public participation is high. Institutional investors are always increasing their holdings. But price needs to improve much better than at present. Thank you for listening. RBL Bank is an improving bank, but it may take at least another 1 year for it to show very healthy growth. Currently it is growing, but the growth needs to improve a lot. Thank you for listening to me. I will be back with you with a very good company. Thank you.